Welcome to Leaders in Lending. I'm your host, Jeff Keltner. This week's episode features my conversation with Charlotte Nemec, the president and CEO of Canopy Credit Union in Seattle, Washington. I think it was a really interesting conversation for me because we really delved into Charlotte's history coming from the HR side of the house and specifically from HR to QSO, where she worked with multiple credit unions, which I thought gave a fascinating perspective. So we spent a lot of time on people. We also dove into some of what she sees as the shifting way her institution kind of thinks of itself and what it represents to the community. A phrase I love, she said, coaching, not counseling, and how they think about the difference between the two and what they're trying to achieve in coaching both their team members, but also importantly, their members, their customers. And then it's an interesting program they had called the One Day Loan Special that I thought was really fascinating and how that worked and the results they've seen. So it was a really fun, interesting conversation, and I think you'll enjoy it. So please enjoy the conversation with Charlotte Nemec. I would like to start the podcast by asking my guests a little bit about their path into the financial services and banking industry, because I feel like everybody takes an interesting path to get here. What was your path to where you're at today?
Oh, people ask me this question a lot. I think that happens when you get to the quote unquote corner office. People want to know, how'd you get there? And I feel like it's been a different journey than probably is typical in the fact that I was in the HR field. I had heard about a job with a local credit union here in Spokane and not fully understanding. I'd been a member of a credit union forever, but I hadn't really done a lot of research on what the credit union bank difference was. And so I thought I liked the idea that I could maybe have quote unquote banker's hours. And so pursued that position as an HR generalist. And it turned out to be this great opportunity where I actually worked for 4 credit unions at the same time. It was a QSO, which I didn't even know when I first applied. And so I got introduced to 4 different credit unions, 4 different cultures, 4 different ways of doing business, and just fell in love with the industry itself. Eventually landed a position with just one of those credit unions. A vice president position came available. So I took that and stayed in that role for quite a few years before eventually applying for the CEO job, and just have been in that chair for a little over 4 years. So it's, HR was my first introduction into credit union land.
So I want to hop into the recently took over reins as CEO, but this must have been a fascinating experience to be in HR for 4 different I feel like HR is such often the culture, the practices are different institution to institution. What was it like to be at a QSO where you're like that just feels very odd to be HR at 4 different institutions that I'm sure operated quite differently?
Yeah. So I love that you're asking me that question, Jeff, because, the credit union difference has often been touted as being collaborative, that we as credit unions oftentimes partner together to do different initiatives. And back in that time at 1995, the local credit union community here was very tight knit. There was not a ton of credit unions in town, but I have so much admiration for the 4 CEOs of those credit unions who put aside their egos and said, we need help in the HR side of things. And were able to entrust me to keep confidential those things that need to be kept confidential, because of course HR does have a lot of confidential information that you gather. And not only that, Jeff, what I really admired so much about these 4 CEOs was they also invited me to have a chair at the table. And I was in strategic planning for all 4 of them. I sat in on very, strategic conversations that I was entrusted to not be sharing, secrets. I don't know if they would be considered secrets, but I really attribute it to the cooperative movement, but also the fact that these 4 individuals were very much collaborative in nature. And there was 1 large credit union and 3 small is how it worked. So that large credit union, never said to me, Charlotte, we're doing this because we want to merge one of those 3 smaller credit unions into us. There was never that push for me to do any of that kind of backdooring. It was always upfront. And I loved learning the culture of all 4 of them. And to be honest with you, Jeff, I got to pick the one that fit me best when it came time to apply for that vice president role. It was very fascinating, and I loved all four of them, but there was one, happened to be Spokane Federal, later became Canopy Credit Union, that just, it felt like home. So
for people who are thinking about that in their careers and what if it is, how did you think about that? Because it's a very interesting experience to get to experience four cultures at once. Most of us kind of like, I've been through a couple of companies but you iterate. So it's, 6 years here, 7 years there, and your sense and feel of the culture is different. And it's not like comparing apples to apples where you've been at a place a similar amount of time and can kind of see them concurrently. So I'm curious that's a unique perspective. I'm curious what it was that when you were in that role, you could say, hey, this is the one that fits me better. How you think about, determining that.
Yeah. So, and everybody's going to have different criteria for what fits for them. My criteria was really, where do I feel like I can make the biggest impact? And that impact comes from, where am I most empowered to give my input and be listened to and heard and see that come to fruition. Not that all my ideas did that, don't get me wrong, but I'll forever remember the day that I came to one of the vice presidents at Spokane Federal at that time and said, we have a problem with one of our main members of management who is eating up people and spitting them out. And she cannot keep a staff. Her staff is unhappy. I'm hearing all this feedback. I'm doing exit interviews. It's all really troublesome. And I'd had similar conversations at at the other three institutions. Oh yeah, but she's been here for a long time. Was typically the response I was seeing is, oh, but she's, that's just kind of the way she is. That's her personality, those kinds of things. And this vice president, who eventually went on to be the CEO, looked at me and she said, what do you suggest? And I said, either we terminate or we find a different role for her that does not lead people. And it really, they took that into consideration. They sat down, they developed a position for her that actually she had been there for over 30 years. So she was very well established. Yeah. And so she ended up being much happier too. This team ended up being much happier. And so it's those kinds of, it may seem small and insignificant at the time, but when an organization is willing to make those hard choices and step into tough decisions, I just really admired it. And that was what I viewed as what I wanted to be a part of. So that's how
we're like totally off the script we had, but that's okay. I want to ask you one more question, which is in your role as president and CEO, I think it's interesting your point about being a strategic advisor in the HR function, because so many institutions say, well, our people are our critical asset. And then the people team, as it's often called, or HR, is like a sub-function of this. It's not really incorporated into strategic planning, strategic thinking. It's kind of like an administrative function. We got to do performance reviews and bonuses, and we got to deal with complaints and whatever. But it's not thought of as a strategic thought leader in how we think about the business. And if people are your most valuable asset, maybe it should be. I mean, the chief people officer is like your CFO of your most valuable asset. I'm curious how you think about, as you've come from the HR side of the business into your current leadership role, how you bring HR into the fold for those strategic conversations. How do you make that real? Because it feels like this disconnect from what I hear from almost every company you talk to. People are our most valuable asset. And then the reality of how the management, structuring, organization, treatment of employees actually is handled in the kind of degree of involvement that the people function has in strategic planning and thought.
Well, you're about ready to get me on my soapbox, Jeff. So
I picked the right spot. Okay.
So for me, and how I have viewed the success of where we've come, is that culture is my number one priority. Our people and their lives, I view them as whole people. And I often say this, you come to work as a whole person. You come to work with the fight you just had with your spouse 15 minutes before you walked out the door. You come to work with your child having puked all over you, right before you walked in the door of the credit union. All the things that happen in life, they're bringing with them to the job. And no, there's no amount of you need to leave that at the door attitude that's going to change that. These are human beings that need to be treated with the dignity and respect of what life throws at all of us. And so the way that we view our team is HR is one of the most vital roles, if not the most vital role that we have. And I'm very fortunate. I have an extremely young and eager HR director who, at every turn, I have him in budget meetings. Like I don't limit him to just people discussions. I pull him in for budget meetings because what's our biggest expense? Our biggest expense are people. And so when I talk to him about, hey, our expense ratio is not where I'd like it to be, what kind of ideas and thoughts do you have from an HR perspective on how we can manage that better? His input is vital to our ongoing success. And he does represent our staff and does a great job of doing that. The good, the bad, and the ugly that comes with that job is a vital part of our continued success. And viewing people as those whole individuals, to me, is my first priority. Because my feeling is I treat them well, they're going to treat our members well. If they feel cared for and appreciated, the turnaround on that is they will then in turn treat our members the same way.
Treat the members well.
So I laugh at the whole... I don't even laugh at it. I scoff at it, probably is the better term, at the quiet quitting quote. I find it an excuse that is unacceptable for us as employers to use, because in my opinion, the generation that's coming in that's quote unquote quiet quitting, I feel like, no, they're just actually asking for what they deserve from their employer. And if they're not going to get it, then expect to get what you get. And I think treating people with dignity and respect as an employer is your number one priority. And if you can't manage to do that, don't expect them to work their heinies off for you. I don't see how there's a connection with blaming the victims here. It's almost like the ultimate form of gaslighting. It's like, no, let's take a look in the mirror before we start throwing them under the bus. So that's my theory on that one.
That phrase has been so interesting as I've heard it, because it seems to be used for both people going, that's not what you hired me to do, and you're asking too much, and I want like reasonable expectations, clear expectations. And then also some people just go, I just don't want to do my job, but I'm going to call it quiet quitting and hope to get paid. And it's like, those are very different things. Employees taking empowerment over, hey, what are my responsibilities and what am I doing and what am I signing up for? And are we on the same page about what I'm being held accountable to, which feels fair. And saying, hey, this wasn't in my job description. If you want me to do it, that's fine. But like, let's be fair about, as I sometimes talk about, it's like, I got a full plate. So if you want me to put something else on it, just tell me what to take off. And that's your purview to tell me that. That's fine. That feels very different. That I hear is quiet quitting. I go, that seems just like good management of your responsibilities as an employee, and not the phrase quitting doesn't seem to make any sense to me at all in that context.
Yeah. And that's again coming back to HR, coming full circle with that. To me, is HR's responsibility is to identify those people that just basically don't want to be there. They don't want to work. They're not committed to the mission and vision of the organization. Between the HR department and their direct supervisor, let's find a way to help them understand this is not a good fit for you, nor a good fit for the organization. We wish you the best of luck because you're a great person, just not a good fit for us. That's different than, hey, I expect you to work 60 hours a week and get paid for 40. Or, I expect you to work weekends and, I'll pay you for it, but I expect you to work every weekend. That's not unreasonable, because we all deserve to have opportunities to build our life outside of work too.
Yeah.
There you go. Rant done.
We're going to shift away from HR. I didn't know we were going to spend so much time on HR, but it's a great topic. But I do want to talk about, when we had our first conversation, you talked about, as you took over as CEO at Canopy, the desire to shift who and what the institution represented and did for the community a little bit. So I'd love for you to talk about what your vision is for what the credit union really is in terms of its involvement in the community, or how your members see you and what you're providing.
Yeah. So I think that going back to HR, really, I think the whole idea of how to make your credit union stand out in a very crowded market was something that was on my mind from the minute I took this job. We have $8 billion credit unions doing business in a population of 500,000 for the county. Spokane County is 500,000 people, and there's $8 billion credit unions doing business here.
It's a lot.
At the time I took over, we were about 157 million. So it was really priority for me to say, how can we be different and who really are we? And in going through some strategic initiatives one year, we were introduced to the CDFI concept and what is a community development financial institution and how do they impact your community. And honestly, Jeff, it was lights went off and fireworks went off. And I said, this is why I got into this business. This is why I chose a credit union over a banking job. And I feel really passionate about going back to the roots of what credit unions were established to do, which was to serve those of modest means. And not for profit, not for charity, is the concept behind that. So I think that we're not a charitable organization, but our idea is by providing people that are traditionally underserved or disenchanted or don't trust the traditional financial structure of credit unions or banks or what have you, and are turning their financial needs over to payday lenders and the buy now, pay here car lots and predatory lenders. How can we impact our community in a way that gives them an opportunity to learn and grow and provide them with financial education, potentially a loan, but not always a yes. Sometimes it's a no and give back to our community that way by saying, once we teach people how to manage their money and how to get through life with the income that they make, then they will be better citizens. They'll be better parents. They will be better contributors to the overall good of our community. And so we got on that. We embraced that mission and really have been doing a lot of work to get us to that point. So that's been where we are.
I wanted to ask one question. Yeah, I think it's fascinating. I want to ask, how do you think about that financial education and helping people understand how to live within the income that they have? I feel like this is some part of that is what I often refer to as how do you get your kids to eat their broccoli? I mean, it's like, it's not the fun thing to do. And people kind of theoretically want it, but struggle with, putting the things they know they should be doing better or differently into practice. How do you think about that? Because I feel like it's one of the hardest problems in the job of serving the underserved community is helping them understand, not just understand how to do better, but actually implement that in real life and follow through when things get hard and manage that through the good times, the bad. How do you think about that education and then providing the right structures to help people actually achieve what they're trying to do?
Yeah, it's an excellent question, Jeff. And one that I will be honest with you, there is challenges with that because you have to meet them where they are. And if they don't want to meet you halfway, you're going to just be, crawling up a tree and falling back down it all the time. So we have a very structured methodology that we use. There's a software platform that we utilize to track progress and success. So we try to, those people that commit to a financial education program with us, the one-on-one coaching that we do, those people are the ones that really we see the biggest impact with. So we see their credit score going from a 520 and going up 200 points. We just actually, it's one of the ones that's standing out in my head is we started coaching with her in February and we just got a report back that she's up in the 700s now. So helping them understand how to raise their credit score, the impact having a higher credit score makes on their day-to-day lives. A lot of people do not understand that your rent, your insurance, all of the impacts that it can have on your financial life. It's not just when you go to get a loan. So helping them understand that aspect of it has been really amazing. Those individual one-on-one sessions, I think, actually sometimes can be easier and because they can see and we can track their progress. Then we get into the financial coaching where we're actually doing a group setting. And we do a lot of that too. We do quite a bit actually of group coaching where we walk people through a budget process. We walk people through how to track their spending. Is everybody going to be impacted by it? Maybe, maybe not. But I think that if you give them just a little bit, and they get a little bit of that information. They may not utilize it today, but a year from now, maybe they look at overdrawn, checking account and say, I'm all done with this, or I can't get an auto loan and I have no way to drive to work. Those kinds of things, to me, we're planting seeds. We're just constantly planting seeds. But yeah, there are some times where it's frustrating because people just want to take out another loan. And we have those people, Jeff, all the time. Just approve my loan. I don't want to listen to your dumb coaching. Well, I'm sorry, we're not going to give you a loan because here's what the problem is. It's not a no, it's a yes, and here's what we have to do to get you to a final approval. So.
Now, you used a phrase also when we initially spoke. You said, we think of it as coaching, not counseling. And I'd love for you what's the demarcation line? What do you mean by coaching, not counseling?
Having grown up with being an athlete in my school years, I always viewed my coach as my cheerleader, as my person that was going to give me the best advice he possibly or she could possibly give me. And then it was up to me to implement it. Versus a counselor, oftentimes you're going to look for answers for somebody to feed you the answers to what you need. And that you just take that into consideration. There's my dog. I apologize. So I think that the difference between coaching is let me stand beside you, and counseling is more, we feel is not, it feels more like I'm giving you the opportunity to say, you tell me what to do and then you do it for me. So I think we just really want to be a coach and stand beside you to do this work, not be a counselor. Some people have a really bad connotation to that anyway. So the coaching element seems to sell better as well.
Good coaches are invaluable. My kids are in their school age sports careers. They've both found sports that they like, my two boys. And I find that there's some things that only their coach can get through to them. They'll come back to me and tell me something. Coach told me this. I go, I've been telling you that for 3 years. And you keep looking at me like I'm crazy. And then your coach tells you, and all of a sudden, you come to me like it's newly received wisdom. Yeah. And I go, oh my goodness. But a good coach that can connect and, give you the pointers and then celebrate your success when you're able to find your way to execute is an invaluable thing in sports and in life, I think.
Yeah.
So I wanted to ask you about one other thing, which is you guys have run some one-day loan specials. Tell me a little bit about these programs, because I think they're an interesting concept.
Yeah, so this came to life as a result of, a celebration of International Credit Union Day. We always wanted to do something special for our members in our community. And we kept seeing the need for people to do a lot of debt consolidation, things that maybe they wouldn't have known that the credit union can do for them outside of maybe some kind of large marketing campaign that we hadn't yet done. So this started out kind of as an experiment for International Credit Union Day, having no idea how much demand there was going to be. And we just priced it extremely well. We don't risk-based price during one-day loan special. We do unsecured lending at a fixed rate for all credit scores. And huge response. We price it, in a way that we feel is fair to A+ credit, but also extremely fair to, that CD credit. We look at debt to income ratios and all those other factors when we make decisioning, but we do, it's been a really successful campaign that we do. I will say, and I think I told you this at one point, Jeff, that the amount of stress it puts on the staff was concerning to me. Not knowing it was going to be as popular as it was, we were not prepared for the amount of applications that came in. So over the years, we've been doing this since, I think we did our first in 2019. Okay. And then we perfected it a little bit more in 2020. And we decided after 2021, let's try to do a 1 week loan special. So
Spread it out over 7 days.
yeah, and honestly, we said nope, not. It was successful, but if you consider how many applications come in,
Mm-hmm.
the same number of apps came in over a week as they did over a day. And our team said we'd rather just power through the one day and do all our follow-ups within 24 hours versus having to do this over the course of an entire week, where every day you walk in the door not knowing how many apps came in overnight, et cetera. So definitely some learning lessons during the process of doing this one-day loan special, but has been very successful for us.
What have you done to lower the burden of the one day? Because it's, I mean, I've referred to entrepreneurship. It's really interesting. It's like, I would like the right next problem. Like, as you're building a business, you're always going to have some sort of problem, but like if you do this, probably the problem you want is like too many people came in and we couldn't process all the other. That was the problem I wanted, but now you have the problem. You have to solve it. I'm curious,
Yeah.
what is it you do to lower the burden on your team or to make it manageable to do this? And obviously, moving to 7 days didn't seem to satisfy their needs. What are the learnings you've applied to kind of making that thing functional for your team in the course of a day?
So we did some technology fixes where we decided to really make the auto decisioning process, I don't want to say looser, but we definitely took off some restrictions in the auto decisioning process after that first go round so that we could get more of that A and A plus paper, even some of the higher B paper approved, just in and out. It's, auto decision done, we're good. And then, from a technology perspective, that was working for us. We actually ended up using some different staff. We pulled some different staff in on the next go round where we had more underwriters ready to go, and just really that was their main focus, was just making sure these one-day loans were getting approved. Those lower paper grades were really being reviewed quickly and thoroughly. And so we doubled the number of underwriters that were in the queue, making sure that they were available. No meetings on that day. We bring in and celebrate for the staff this actually in October. We brought in a food truck at the main location. We brought in lunch at the other locations, and just tried to make it a celebration for our staff and less feeling like, oh my gosh, here we go again, this one-day loan special that's, crazy successful, but also one day of, my hair's on fire. So really tried to make that more appealing to all of them. So I think between technology and just acknowledging that we had some people shortages and we couldn't have people gone on that day, especially those key people for like underwriters and processors that make the actual loan officers' job a lot easier.
That's interesting. Shift some people around. No meetings. Maybe I'd like to do one-day loan specials just to have no meetings for a day.
Nope.
Sounds like
no meetings, no out of office, events that are going to be needing to be, because we
no
do
team offsite for the underwriting team. We're not doing a team offsite for the underwriting team on the one-day loan special.
No can do. Yeah. And to the staff's point, that's one of the things I love about our culture, Jeff, is that we do a debrief after all of these major, campaigns or events that we do. There is a debrief where we ask our team what was successful and what was a failure, and always take that feedback into consideration, and then also circle back with them with solutions and or reasons behind not being able to change something. So I really love that about who and what we're trying to do at the credit union, which is really open and honest dialogue with each other about anything and everything.
Love it. Well, all I have left are the 3 questions I ask everybody at the end of the podcast. Otherwise, I think I've got through all the notes I have on my Remarkable. So unless you have anything else you want to say, I can throw those at you now.
Throw them at me. See if I can do this.
Let's go. So rapid fire. So the first one is, what's the best piece of career advice you've ever gotten?
Oh, I think never go it alone. So the idea that when you're in that chair, it's easy to think that you can make decisions and not gain support and buy-in from my board, from other team members. And that inevitably can lead to a dangerous situation for a CEO or an executive. So never go it alone. I have a lot of people that surround me that help me when I need to bounce ideas and thoughts and ideas for the future. So that one was good.
I like it. Second question is, what's the best piece of advice you've gotten about the general consumer banking, consumer finance industry, which was obviously it came in through the HR door. So I'm curious about like when you went to a more business oriented, product oriented set of roles, like what was the advice you got about how that industry works?
Oh, I think I'd go back to those 4 CEOs that I worked with, Jeff, which it always came back to the members. It always came back to what's the right thing to do for the member owners. And if you can get on the phone with someone and justify a decision you made in an articulate kind of way, those member owners are going to stand behind you. And if they can't, then it's okay for you to say this is probably not the credit union for you. And I've had to take that to heart a lot in the decisions that we've made in the 4 years that I've been the CEO. We made a massive amount of change, including a name change, including opening two new locations, going to 100% ITM model. So there was a lot that I had to really get comfortable with explaining my reasoning, and also get comfortable with members that just said, not for me.
Got it. And here's my last. What is one bold prediction about the future? I love it. This just open-ended, bold prediction question. It's one of my favorites.
I have this, I have an extremely intelligent IT guy that works with me. I've worked with him for 27 years. And he and I have really been on a debate about blockchain technology, not specifically cryptocurrency, not the crypto world necessarily, but just blockchain in general and what it can do for the financial services industry, and how we can make the mortgage titling work easier and better, how we can make even auto titling easier and better using the blockchain, and all the opportunities that are out there for how we could use blockchain. It's one of those things that I have to educate myself about all the time because I don't 100% always understand it. And so I'm always, searching and looking for other things. But, I know that the cryptocurrency world, I think, is very volatile, and obviously that FTX demise has been an eye opener for a lot of people. But I don't think that the technology that has supported it is a bad thing. I think it could be utilized for good, and I see that as the future. That we're all going to have to start figuring out what it is, because I think that could help us all long term.
Interesting. Blockchain, not cryptocurrency per se, which is just one instance of what a blockchain is capable of. And,
exactly.
Interesting. I like it. Well, Charlotte, we'll leave it there. Thanks so much for taking the time today. I really appreciate it. And I really enjoyed the conversation.
Yeah, me too, Jeff. Thank you so much.